Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, here we are, Jim. It's Friday, and it's good to be with us.
Bob, can you maybe explain a bit of a name change here?
Yeah, we had institutional advisors for a very long time, and we just thought it was time for a change. The business is changing. Our tools have continued to improve, and so it's a bigger basket now of business than we've got, and I kind of like the change. We've got the new website set up, and actually we set it up so even just rather than do the whole charts and markets, you can just do bobhoye.com and it comes up. So, yeah, let's call it this way. It's a step.
Bob, the U.S. dollar has been the market darling of the past while. Is it going to continue? And what about our poor little Canuck buck, which is at a one-year low?
Yeah. Well, the U.S. dollar, a whole lot of professionals out there really hate it, and there is a reason for hating it, and that is, of course, the Federal Reserve System, which is a central bank. And their one policy for everything, no matter what is going on, we have to provide more credit. And providing more credit than what is needed ends up in currency depreciation. But actually, Jim, when I think about it, that these ideas of managing the economy, they were sincere about it maybe 40 years ago. But really what it is now is that the central bank has been corrupted into providing funding for an experiment in unlimited government. Now, with the popular uprising in the States and the election of Trump, you now have some forces of opposition coming into the idea of big government, or as we call it lately, the deep state. So anyways, the state has thrived on raising taxes and depreciating the currency, and the idea is to stop all of that. But at any rate, earlier in the year, the latest downtrend in the dollar had become oversold, and we used the U.S. dollar index, and it came down to, I think it was 88, and was sharply oversold. Now, we looked at the two last important lows in the U.S. dollar. That was in 2014, and before that it was 2008. So on those bottoms, it came down to a hard oversold. Then it spent some months churning around, and then it started to rise, and the key to a successful rise would be taking out the 20-week exponential moving average, which this time was April the 23rd. So then that made the rally. And it's continued. So just not going to put it in. So yeah, it came down to that 88, and the breakout was at 89.5, and the high recently was just a bit above 96, where it's somewhat overbought. But there's a lot to this in the currency. In a financial boom like we've been in, Jim, the most of the debt issued would be done in the world's financial capital, which is now New York, and it's due and payable in U.S. dollars into New York. So the bigger the bubble, the more debt that's been floated, the more debt that's due and payable in New York is a huge short position on the dollar. And the reason why we watch it is that in previous great bubbles, the senior market, the senior currency, and the market was London and sterling, and it was the same thing. So you had the first bubble in South Sea bubble in 1720, and then what happens is that once the bubble is over and the contraction starts, and that's a credit contraction, the senior currency becomes chronically strong, and the way I like to phrase it is chronically strong against most other currencies and most commodities for most of the time. And so this way, the last few weeks of this rising dollar has importance. So it set the uptrend, and now as of this week it got a little overbought, so it can correct. But also this week there was the industrial commodities, base metals, lumber. They all took out a key support in average. So these things are heading down, and on these industrial commodities, remember earlier in the year we pointed out that industrial commodities would likely rally out to around May, which they did, and lumber had a huge rally, unprecedented. Base metals did well at various times. So that would be part of the sunshine for the stock markets out to around May. The other one was that the credit spreads would narrow, and they have. And the other one was the yield curve, which is the difference between long-dated instruments and short, would continue to flatten, and it has. So all the stuff we were looking for to come in by around May, or definitely by mid-year, which is around now, has worked out on the upside, and now we're looking for corrections to this, and they seem to be starting.
We'll have more with Bob Hoye right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Bob Hoye. Bob, the Canadian dollar, is it going to ride the price of crude this summer?
Yeah, it will. We've got, crude got oversold earlier in the week and is moving up. And part of that is today the dollar's down a little, U.S. dollar's down a little, so the Canadian's up, yeah. But you've got an endemic problem in Canada, is that the federal government is got itself back into the late 1960s socialism. And this is not good for anybody except for the governing classes, and who really want to run everybody's life. And for doing that, take most of your money. So it's not a good recipe. And at the same time, you have a fundamental reform going on in the U.S., which is attempting to get the idea back in about limited government. So there's in the number of rules and regulations since Trump took to office has been diminishing. So you've got a popular reform going on in the U.S., which will provide a sounder economy and sounder government, and also, might add, a sound currency. Whereas in Canada, the guys are still off in airy-fairy dream world socialism, and which is not healthy for people and small animals, but it provides tremendous power to the state, and this is what they want. So Canada is eligible for reform, and I believe it will happen. But in the meantime, it's going to be difficult for the Canadian currency with this obstructionism going on in Canada. And there are a number of energy growth things that are being turned off. They will not follow the rule of law themselves in allowing pipelines to be vetted and sorted out and given their approvals and then go into production with them. It's just not happening. So people are looking at Canada and saying, hey, this is not a place that you can do business in. So Canadian dollar, yeah, it's going to go down, unfortunately, and as it goes down, it makes the cost of living for all Canadians more expensive. So it's not a pretty sight.
We'll have more with Bob Hoye right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Bob Hoye. Bob, U.S. pension funds are not allowed to invest in equities, so basically if they're not collecting interest from an account, they have to lend money, and right now they are lending money to everybody and his dog. Are they in just as much danger from doing that as they would be if they were invested in the equity market?
Yeah, it depends what they're buying, but with interest rates having got down so low, it forces otherwise people who should be careful investors into buying, reaching for yield, which is getting into risky investments. So I'm sure that they have a fair amount of risk on, and it's fine so long as the bubble is on. And but bubbles always come to an end, and our thinking is that we could discover this later on in the year. We are now really at the time, you know, the old saying, sell in May and go away. That rests upon usually the change in the credit market. So we're now into June when the credit markets can turn from favorable to unfavorable. But with the fixed income, the street considers that the only risk to an interest rate portfolio is with inflation coming back. And what is overlooked is that at the end of every bubble, you have a credit contraction, and the price of most bonds get marked down. And let's just look at, say, junk bonds, for example, which are dependent on the boom continuing. And then when the business activity slows down, their income will slow down. As commodities go down, it reflects pricing power through the whole mix. So they find it difficult to service their debt. And then along come the credit rating agencies and, marked down in credit assessment. So the problem, one of the real problems in the whole long business cycle is that when you're past a bubble, prices of most things deflate. And if you can't make enough money to service your debt, then your bonds go straight on down and you get credit rating moves against you. Now, this also affects governments. If you're buying provincial or other country bonds, that in a severe recession, which usually follow a bubble, the tax revenues to cover those and service those debts diminish. So you can have your worst moments in the bond market in a post-bubble contraction. And, of course, you have had your best moments in the boom. So in the interest rate markets, long-dated treasuries in Canada, they peaked dramatically in June 2016 and have had a fair setback, whereas low-grade stuff like junk, it made its peak earlier in the year and has corrected a little. But both of these sectors are vulnerable to the problems you get with a post-bubble contraction. And our ideal for a careful investor is to be in 3 to 4 year good grade corporate bonds. If you're this short a maturity, you won't get hit on risk of being too long. And with good corporates, you can have a higher yield than, say, in treasuries or government of Canada's. And for Canadian investors, you'd buy U.S. corporates because you'll get the pickup with the U.S. dollar going up relative to Canadian. So it would be a very nice place to be when the storm comes. As I said, 3 to 4 year corporates, good grade corporates, U.S. And it'd be a nice position to have.
Bob, thank you so much for chatting with us.
Hey, it's very good, and we look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. You can forward questions to Bob or other guests or the show to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.